Hey everyone, welcome back to another episode of the Better Wealth Show / podcast. If you're watching this on YouTube, you're going to get special benefits because we're going to be drawing on my computer, and I'm here with Chris Kirkpatrick. And one of the cool things, and if you don't know who Chris is, go back. I've gotten two episodes with you already that share your story. Yep. We have some collaborations that we're doing. He has a ton of great content on his channel, Life 180. But one of the things that we wanted to do is I wanted to share with you how Chris talks about the financial pyramid, and I think it's like a bedrock principle that you should have as it relates to your wealth. It was one of the first things that you shared with me when you first came into my life. Yeah. And I'm like, this just needs to be shared. This needs to be articulated. And so thank you so much for being in the studio and sharing this with my audience.
This is awesome. I love coming up here and visiting and getting away from the chaos of 3 kids and everything. And this is going to be a lot of fun. So let me give a little background to this. When it comes to how I did this, for those who don't know me, I used to be in the financial services space. I now run a business development agency, but this concept is something that I learned over the years as I was going through all my training and upbringing. And I thought, and this is why Caleb and I work so closely together now, is because I'm still so passionate about financial literacy and right. financial education. And I think that there's a huge gap of understanding. And I'm a big believer that, the market is cyclical. Yep. It's not linear. It doesn't just slowly go up on this like nice even curve like a lot of advisors would like people to think. And I'm also a big believer, like, if you want to be successful, you need to find the people who have reached a level of success, whatever that looks like to you, and emulate those people to get there. Now, I was blessed when I was like 29 and I met a guy. His name was Corky, and he really opened my eyes because he talked to me about like, hey, Chris, like, you're not going to get there by just investing in mutual funds, investing in stocks and buying and holding and whatever. The market is cyclical. I mean, he didn't say it so succinctly, but he basically said the market is volatile. It's all over the map. And if you really want to become wealthy, you better be really good at protecting your money and not following the crowd during the good times, and then being able to position yourself so you can crush it when everybody else is freaking out when the market's going down. You can take advantage of the opportunity at that point in time. So I started thinking about like, okay, what does that structure look like and why? And so I'm a researcher and I get all into this stuff. And so I started doing research about the economy. I started doing research about the national savings crisis. I started doing research on qualified plans of 401ks and the problem about all this. So I'll talk about it as I go through it because I think it'll make more sense if I do it that way. But let's just jump into this at this point in time. So like, we call it the financial pyramid, the Life 180 pyramid, simply because, what did I just do?
Let's try it again.
We call it the Life 180 pyramid because it is a pyramid. Now, if you know anybody that has ever gone through training to become a certified financial planner, this is actually information that's taught through the CFP program, right? Mm-hmm. So they're taught like that you need that we got high, medium, and safe, right? So this is all associated with risk, right? So we need to make sure that we build from the bottom up. If you build a pyramid from the top down, obviously,
have a solid foundation.
It's a mess. You need a solid foundation. So what does that mean? That means you need to have savings, right? And I'll talk about that in a second. You need to make sure that you have the right insurances. That can be your property casualty, it can be umbrella insurances, it could be life insurance, it could be like any of that. So when you look at those two things there specifically, when we talk about savings, how much money do you need saved is the real question. Mm-hmm. Now, I know there's a lot of people out there. Dave Ramsey says 6 months. Susie Orman says 8 months. There's a lot of people that say whatever. But if you follow Caleb, and I know you do, you know that that's not even the important question, like how much. The question is why. Yeah. Right? Like, why you? And so I'm not going to sit here and tell you that you should have anything saved in a specific amount saved. I'm gonna challenge you to think about, what do you need saved for your life, for the circumstances of this video and for this example. I'm going to talk about a $100,000 income earner, who's got a regular job, who needs to be prepared for a time of uncertainty, a time of, like, we don't know what's going on. Maybe 2008 happens again. Maybe the coronavirus happens. Maybe something happens in the world and they lose their job. So how much savings do they need? And why does anybody say 6 months or 8 months or any number? Well, I always say I want to make sure that they have enough saved to make sure that they're prepared for not just protection and security, i.e., how long is it going to take them to get another job? Like, what do they need to be able to go through cash burn wise to be able to survive without having to, you know, like need massive assistance or have to sell their house or like, and you wouldn't want to sell your house in a circumstance like that because the economy's going down. You'd be selling a negatively performing asset. Like, you don't want to do that, right? So I say that you should have 2 years of income, which is a big, fat, audacious statement that rubs a lot of people the wrong way. But I say this because of the fact that if you're earning $100,000, that means you got to have $200,000 in a safe, liquid, accessible, guaranteed account, right? Like, that sounds like a lot of money. But here's why I say it, because you need a year, because I don't know if you know this or not, but if you make $100,000, the average time frame that it takes, according to the Department of Labor, for a person to find a job is 1 month for every $10,000 of income earned, right? Now, that gets a little faster as you go down in income because there's more jobs available. But when you hit the $100,000 income level, you're talking about 10 months average. I don't know about you, but I'd never want to be average. So I want to be prepared for a little more than that. So I say a year that gives an extra 20% bump to the time frame of the average, and we're protected. So then you go, okay, that's great. That's 1 year. What's the next year? Well, what did I say to start this? I said that people, if you want to be able to create real wealth, you better be prepared. Warren Buffett says it best. You better be prepared to make money when there's blood in the streets. That's when, like, if you're listening to this right now, Warren Buffett has increased his net worth by like $23 billion since the beginning of the coronavirus. Like, you know what I mean? Like, that's not an accident, everybody. You know why?
Exactly.
Because he's structured in a way that we're talking about here. So what is this? What did I just draw? I drew an upside down pyramid. Why did I draw it? I drew this upside down pyramid.
Welcome to America.
Because this is the world we live in. So let's talk about this. Did you know how many people, do you know this? How many people have $2,000 liquid in a safe account that
I don't know the exact number. I know it's a lot.
Okay. So we're talking 74 or 64% say they don't have it. So what does that mean? That means 36% have it.
Have more than $2,000.
Have $2,000 or more. But here, this is done by Gallup poll, by the way, and this Gallup poll was done back in 2017.
Okay.
So, or 2015. I'm sorry. So they did a Gallup poll, and 36% of people said they did have $2,000. But here's a trick: out of those 36%, 70% of those people counted their 401k as that place of savings, not even a liquid account. They didn't have it. So what does that mean? That means like really 90%.
Yeah. And we saw this when there was uncertainty in the marketplace. Like it totally freaks everyone out, because it would freak me out if I didn't have any money.
So here's the thing to think about. So if that's happening, let's talk about the crisis that's really happening. We did a whole series, and if you haven't watched it yet, I would go check out the channel. We did a whole series on the 10 perils of your 401k. And when you understand this concept, you understand how important understanding those principles are.
Right.
And so let's talk about this. If 90% of the people that had it, or 70% had it in the 401, said their money was in their 401k, let's talk about that. So what happens if your money is saved in a 401k when a time of crisis happens, like coronavirus, like 2008, like it happens on a pretty consistent basis every decade or less on average. When that happens, and if you don't have money in an actual safe, liquid, guaranteed account that you can access in time of crisis or opportunity, then there's going to be a cost to access that money, right?
Yep.
And not only that, now if your money is in a 401k, my guess is you're going to be selling a negatively performing asset, right?
Right. Yeah.
Because the market's down. Most of the time, most likely, if the economy's down, if you lost your job, if there's uncertainty, the market's going to follow suit, right? So you're going to be selling a negatively performing asset, and you're going to have to pay kind of an ignorance tax is what I would call it, to access that money, because you don't know what you don't know, right?
Right.
And that's like, it's not okay, but like it's going to be okay because you can get past it. Especially now with the programs that are out there to help you get through it. But so did you know that in 2015, that people paid $21 billion in taxes and interest, taxes and fees, sorry, just to access their 401ks.
Oh, I did not know that.
That's not how much they accessed. $21 billion in taxes and fees just to access their 401ks. So that's $14 billion, right, in taxes, and then $7 billion in fees. So like, okay, let's ignore the $14 billion, because let's say you had to pay taxes anyway, right? Like, because it's earned income, like you're not getting out of this life without paying a certain amount of taxes, and so that is what it is. But let's talk about this number: $7 billion in fees.
Yeah.
People are giving Trump a hard time for $4 billion to build a wall.
Yeah.
Like, not to go there, but like,
but
that's a lot of money.
Yeah.
It's a lot of money.
Yeah.
Like, and to me, it's your money. You shouldn't have to pay a dime to access your money on that context. And so this is the problem with current financial structure paradigm in America, is that we live in this volatile market, right? Like, the market goes up slowly and it comes down drastically. It goes up slowly, it comes down drastically. It comes up slowly and it comes down drastically. But and you notice, if I look at this, there's a trending line, and that line is going up, right? And so, yes, there's money there, but Warren Buffett and all the people like him and people that like implement our strategies, the time when to make money is at these points, right? Or somewhere along here, somewhere along here, somewhere along here. And the bottom line is, like, it's harder to get hurt when you buy right? Like, the best way to make money in real estate is to buy right. The best way to make money in anything is to buy right. Period, right? And so that's what we kind of coach people to. If it takes 8 to 10 years to go up, it's going to take 6 months on average to come down, right? And we just experienced it. The market's bouncing back, but like, I don't think this is over.
Right.
Like, you know what I mean?
There's a lot of artificial numbers going on.
Yeah, there's been so many programs and stimulus and just money printing and like all these things.
Right.
And everybody's got their house in forbearance, and like, they're not paying their bills because they don't have to. And so like, this isn't over. Like, I just want people to understand that we are going through this. So the problem is, if people don't have their money saved here in a safe account, when a crisis happens, when we have one of these down cycles, what happens is you go, oh crap, I lost my job, I have no money saved, I need to tap into what I do have. And most people, 90% of people, that is your 401k or a qualified account. So what happens? You have to tap into where you have it, and you rip it apart. And so now what happens is, you've now this little point of instability, which is the foundation of your financial life, which is a complete mess. You basically crack the foundation with one little distribution.
A little bit of wind will knock it over.
A little wind knocks it over, and boom, your whole pyramid falls over, and your financial life happens. And so here's the scary part about that, Caleb, is that we wonder why there's this growing gap between the middle class and the wealthy, is because the wealthy understand the left pyramid.
Yeah.
The Main Street America is doing the right pyramid, the exact opposite. And what happens is, think about this from a perspective. If I say 8 to 10 years, let's say this is 10 years, this is 10 years, right? If this happens to you one time in your working life over a 30-year working history, one time, or I could maybe add one more thing for 40 years, but like one time, it's going to have a serious negative consequence on your wealth potential.
Yeah.
I mean, you know this, you do the numbers every single day.
Yeah.
And so like, it's astounding to me that people are doing this, like one little setback, and you literally could be playing from way behind the 8 ball. So here's the thing, is when this happens, what happens is, like, human nature sets in, right? Since most people are doing this, most people are structured,
because we put a value on rate of return, and we haven't put a value on safety.
Yep. And so now what's happening is, these people are selling assets at reduced rates.
Yep.
Right? They're selling their stocks and mutual funds at reduced rates. That causes the market to drop even more.
Yep.
It's kind of like a run on a bank, like back in the day. And it causes asset prices to come down. The car lots, auto sales, auto companies aren't able to sell the cars that were, ramped up when the economy was good. So now lots are full of cars, so they just start blowing cars out at lower prices. Used cars are cheaper. It's like, we love to say, it's a race to the bottom, right? And so who are the people that benefit? the people that benefit are the people with cash that are liquid, that are stable. And so what do? When everybody's on this race to the bottom, the people on the left pyramid are waiting here at the bottom being like, oh, it's like catching money in a basket.
Right.
It's literally that easy for them. So what I like to say is like, when times go down, the opportunity goes down for the period on the left, but the opportunity goes up for the pyramid on the right.
Yep, I love it. And I like to say the golden rule. I got this from Nelson Nash. The golden rule is those who have the gold make the rules. And so if you have access to capital, opportunities will seek you out. Yes, you want to. There's two things I just want to mention. Number one is when you have money, you can think clearer. You don't have to worry, and that will allow you to show up more powerfully wherever you're at. And that there's a lot of value with peace of mind, and like that will just give you a lot. And then number two is you'll actually, once you have that foundation covered, you'll have opportunity money to do whatever you want with it. And hopefully if it is invested and it goes down, you're not freaking out because you have your foundation figured out. And if you're someone like me, you're kind of holding on to money and
100%.
looking for opportunity, looking to invest in your business, looking for a good investment, because if and when people's pyramids fall over, it's just a fact. There's going to be a lot of opportunity. Anything else that you want to do?
Well, I would just say this, is that what I love about you guys is you're basically the tunnel of information that's going to help people get from here to there, because I know it's overwhelming. Like it can feel really daunting. I would say, like, if this is you, if you've done this cycle once or twice, which there's a good chance, likelihood that you have, yes, it's going to take a bit more work for you probably at this point in time, but now more than ever, efficiency is more important. Right. And making sure that your financial structure is important. And I want to make it to the point, because he wrote this book, The And Asset, right? The And Asset. And so with this book, with the strategies in it, it's all about, he doesn't talk about it in this context, but it is this pyramid. It is, this left pyramid where you're building with a foundation of safety and a savings vehicle. Remember, we always talk about life insurance, when properly structured, is not an investment. It is a storage vehicle that is going to give you more security, more guarantees, more opportunity, more control with your money. Right. And so you are going to be able to put yourself in a position where you have this foundation completely built and solidified. Hop back to the screen for me. And so when you do this, once you have this financial house in order, I'm going to encourage you. There's going to be this real desire to keep up with the Joneses. Right. We're surrounded by people that are like, man, I'm making 20% in the market. You know what I mean? You got to be willing to have the faith and the trust that you're plugging into a system that is setting you up for long-term success. It doesn't matter how much you're making right now if it all gets swept away from you in 6 months, right? Like it's not real until it's there. And so what I would say is, like, you got to be willing to commit to building this. Once you have it built, once your life will be completely more powerful. You're going to be able to show up more powerfully and make a greater impact in whatever it is that you want to do, even if it's just your family. Like, you're going to create more security and more legacy and everything for your family. You're going to be able to have more creation. When you have this set up, now you can get into some of the more, I'm not anti-stock. I'm just a big believer in only investing in things that you understand, right? Like, if you decide you want to take some more risks or like do some more things, now you can start doing that and taking on medium risks. If you want to start doing other things, like I know I deal with some people that deal with like gold or crypto, or, they buy like growth stocks, or like, do whatever. If you want to do that once your foundation is good, okay, that's great, because like, let's take the right pyramid into consideration, right? This falls apart. Like, if you have this structure on the left set up first and it does the same thing, right? Guess what?
Your
no harm, no foul.
Yeah.
You're still good.
Yeah.
Like, this will come back. You don't have to sell these negatively performing assets. As you see in the long run, they're going to get better.
Yeah.
Your wealth is still going to continue to increase. You just got to let it rebuild. And when it rebuilds, it will rebuild bigger.
Right.
You know what I mean? You got to give it the opportunity, though. And you're still going to be sitting down here with the money. If you're going to be safe, because if you lose your job, you're going to be good. And if you'll have the money there for more opportunity to take advantage and at least get a little piece of these downswings.
Love it.
And that's what it's all about. So
make sure to go out and live a continued intentional life. Make sure that you have a strong foundation, and ultimately we're doing this so that you can live more intentionally. And I think it's pretty evident that a solid foundation is something that you can build a solid legacy on, and that looks different in multiple different ways. Take care.
Take care, guys.